Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, Paul. How you doing, brother?
I'm awesome, man. How are you doing?
Awesome.
You are doing awesome.
Thank you. It's been a good summer.
Yeah.
So
Yeah.
I'm looking forward to next summer. Little trip we'll be on together, so that'll be fun.
Oh, it's gonna be way better.
Yeah, we're going on a good trip next month. We're going hunting.
We are.
So this is the. Is
Hey,
this
did you get a new shotgun yet?
No. Are you going to bring me
All
one?
right. Well, I only have one bird shooting shotgun. The other shotgun is for other things.
Well, I think I asked. Well, mine is really for home defense, but
Right.
that's why I'm such a terrible shot shooting pheasant. Unless I'm shooting a hen, and then I nail it every time.
Never miss.
Yeah. Oh, that reminds me. I need to renew our hunting license for me and
Yeah,
Jack.
that's right. That's a good point.
Yeah, got to do that. But I guess we have a full crew this year. So is this your second or third
It's
time?
my
going?
second.
Yeah, 'cause
Yeah,
you
I
didn't
missed
go
last year
either.
because I had alumni weekend. Yeah.
Yeah. Well, September's busy. I've got that actually going on like 2 weeks after that. But yeah, it should be a full house, man. Yeah, all the usual suspects are going to be there, and then whoever Paul brings along with him, you never know.
Just my boy.
Yeah, that's cool. Yep, and I'm bringing one next year. I'm going to bring 3 boys, so I think I'll get all the
Get 'em all,
older
huh?
boys and get them out there and
Yep.
yeah,
They
it'll be
should
fun.
all get 20 gauges now. That'd be great.
to use once a year.
Oh, no. They can use it there. There's going to be like little trap and skeet or I don't know.
Yeah,
They don't
we
have them, they drive to high school. They have the little, gun mount in the car. They don't have that up there.
Yeah, we're too close to Minneapolis for that. You get pulled over and looked at weird. But
That's right. Only the criminals can have firearms up there.
exactly. So, yeah. Well, finishing up the summer, man. Looking forward. Yesterday was like 60 degrees and rainy, and
Oh.
next week it's going to be over 100.
Crazy.
So, yeah, this weather's all over the place. But I'm not complaining. I don't complain about hot weather because I know what's right around the corner for us
Yeah.
up here.
Does the climate change?
Of course, there's climate change. What are you, crazy? What do you mean?
Yeah, climate change.
Yeah.
Does the climate just change?
It does. Yeah. And I don't think it was anything to do with me
I don't think you did anything.
aiding that climate change. Yeah. It's kind of like just the way the world works.
Yep.
The universe.
The
Anyway.
dome.
That'll be a fun conversation next month.
Oh my God, hilarious. Next
Anyway.
month.
All right, man. All right. Well, what do we want to talk about today?
Well, there might be a little sprinkling of things. You said you came across something, and then we both came across something this morning from a little IBC mastermind that we're both a part of. That I was on my way to work listening to this stuff and kind of getting triggered because I think, you and I are both Infinite Banking Concepts authorized practitioners with the Nelson Nash Institute, and I think if you're proclaiming to teach or sell this type of process, and you should be that, I think. And there's some out there that are, I guess, we've talked about it before, bastardizing Nelson's message, doing other things, getting people involved and stuff, and it's just I don't like it.
Yeah, and not just bastardizing the message, but using the term infinite banking concept, as if they're speaking for all IBC practitioners,
Correct.
which they're certainly not. So there's quite a difference If anybody's ever run into, people who say they know how to do this and then people who actually know how to do this.
Yeah. And, Dave, the problem that we have with it, right, is that, okay, fine, go do that. Everyone needs to go make money and do their thing. That's fine. But don't claim to be something that you're not. And also, if you're not doing this the right way, the way it's intended to be used, and really I'm trying to talk about policy design here specifically, or the type of policy, even worse, some people are out there spouting off about using index universal life with the infinite banking concept.
Right.
Can't do it. Sorry. You can try to do it. You just won't be able to do it very well. The effects of bad policy design down the road, largely unknown, but likely to cause problems for those people that are buying these bastardized these policies. Anyway, we might get into that a little bit later, a little more detail later down the road, but we've got, something else that we came across as well that has to do with something that we all have probably. Do you own a weed whacker?
Yeah. That's a story for another time.
Yeah.
But yeah, so what you're talking about is a home, a mortgage. Do you own your home? Actually, nobody really owns their home. Let's be honest.
Right.
If you don't pay the bills, somebody's coming for it. But a mortgage, which is what most people can relate to. I think most people, at least in their 30s, mid 30s and beyond, have experience with owning a home, paying a mortgage. And then there's always that, there's a lot of people that taught, they want to pay that mortgage off, which is a noble goal. And there's absolutely nothing wrong with paying off your mortgage. A lot of people entering the retirement stage, the passive income years, they don't want that mortgage, which great. If that helps you sleep at night, which for many people it will, because, as Trent always says, math isn't money and money isn't math. It may make more financial sense from a looking at the numbers perspective to not pay that off and do something else with that money. But if it comes down to your emotions, and I was talking to one guy who said he's got PTSD from debt. And that's a pretty strong term to use. So we didn't dive into what exactly gave him that PTSD, but that's when right away, hey, your emotional stability, or that feel good can oftentimes outweigh the numbers if you lay them out in black and white, because those numbers don't have any emotion to them, right? It's like a robot, you're Spock looking at those. You just make a logical, rational decision based on numbers. That's not life, and that's not the human being. We are very complex creatures, and we run on emotion very much. In fact, it's been said, you can't even make a decision without emotion, period. Like, what's that old story of Phineas Gage, who had that railroad spike go through his frontal lobe, and he no longer could regulate his emotion. He also, or people with a lobotomy, like they can't make a decision.
Right.
Because you got to have emotion. It's strange. I don't know a whole lot about human psychology and all that, but when I learned that was really interesting, and it made me think there's a lot more to this than just numbers. So we don't want to be emphatic about anything one way or another. But let's talk about why some people choose to, let's say, for example, I was talking to somebody recently who was paying extra on their mortgage, right? Which there's some advantages. I think if you pay something like, one extra payment a year, you can knock 7 years off your mortgage payment. So you can pay a house off in 23 years.
Yep.
Right? Just by making one extra payment a year. So instead of making one payment a month, make one payment every 2 weeks, or half a payment every 2 weeks.
That's right. And that's what I do actually on this one. So it's an extra payment every year.
Do you? Yeah. And that knocks 7 years off, and you don't even notice it.
I don't even notice it. I just did it just because. Right. I'm not going to miss that one mortgage payment, right? Don't feel it.
Yeah, exactly. So why don't you start taking it from here? I got a visitor dropping by. Stand by. I'm going to put it on mute.
Yeah. So as Dave was saying, everything with money is an emotional decision. And I think the mortgage discussion or getting out of debt, we're bombarded with this paradigm of get out of debt, get out of debt, get out of debt, get out of debt. Pay cash for everything. Have the envelope for this. And I think for a lot of people, or for some people, that might be okay. But what you need to ask ourselves is this, and no question, Dave, right? Mathematically, when you look at the amortization schedule of a 30-year mortgage, the volume of interest, as Nelson talks about, is enormous.
Enormous.
Even if your interest rate is 2.75, like mine is on this house, or 5.25, it gets worse, obviously, as the higher the mortgage rate gets, the situation is worse.
Mm-hmm.
I think on the land we just closed on, which is at 5.25 or something, or maybe it's 5.25. But I think if I let it go the whole time, it's over 102%.
Well, you're not kidding.
That'll pay for it.
Well, let's stick on this for a minute, because I think that may be something that a lot of people just gloss over. You're signing the forms. You determine, hey, I can make this monthly payment work. Let's get this house. You sign the forms. They stick that amortization table in front of you. You just sign that paper and you flip it over and move on to the next.
Right.
One, maybe you did it intentionally because you don't want to feel that kick in the gut of seeing that your first payment, 75% of that payment's going towards interest versus principal, or more. But I was just looking, so I've got a little mortgage calculator, and I highly recommend, if you guys don't have a financial calculator on your phone, I like the letter E, Z calculators. That's got a ton of different financial calculators in there, and I always use this loan calculator. I love it. So I put in a loan amount of, say, $600,000 for a home. Interest rate 6%, which is realistic right now, for 30 years. So 30-year mortgage. That's going to cost you about $3,600 a month. Your total payment on a $600,000 mortgage over 30 years is nearly $1.3 million.
Yep.
So that's like 115% of what you're paying in interest, right?
Yeah, it's insane.
It is insane. And look at the very first month.
Told us that, but
yeah, your very first payment of $35.97, so about $3,600, $3,000 goes towards interest.
Right.
Yeah.
What a business! Golly.
What a business to be in. And guess what? People do every 5 to 7 years.
They refinance
or they move. Yep, and you start that whole clock all over again.
Start it over.
Banks
again.
love it. They can't get enough.
And Nelson said that it basically ended up helping equate to disposable income of 34.5 cents out of every dollar of disposable income is going to interest. It's very believable.
Oh yeah,
very believable.
Very.
Gosh. So I guess psychologically, Dave, we can relate to the people who see that. They've recognized it, which is super important. And they decide, you know what? This is awful. I want to pay less interest to the bank.
Right.
So I've got the extra capital on a monthly basis or quarterly basis or whatever. Therefore, I'm going to dump an extra X amount towards the principal of this mortgage. Okay. So I guess to play devil's advocate, hey, that's great. Do that. On the flip side, though, ask yourself this question, folks. And I've done this in the past as well. I've totally done that. And one could argue that I'm doing it now with the extra payment a year. What am I giving up? Well, let's use an example of $1,000 a month. I'm giving up the use in the liquidity in the opportunity of that $1,000. So $12,000 a year. I'm sending it to the bank, who's then taking it and lending it back to me for the car I just bought.
Yeah, exactly.
So I'm making the bank the wheel. I love how Nelson puts this in the book. I'm making the wheels of the banking business in the real estate business. I think I've got this right in that order. Turn.
Yeah.
I'm just helping it turn faster. I don't get a dividend from the bank. They're not rewarding me for sending the money, which is your money, my money, his money, her money, that's sitting in the bank, that they're inflating and then lending it out to us. I'm giving them that money back faster than they've asked me to. But I am saving that interest.
Right. So the positive, you're saving interest. You're cutting down that interest. Because I just ran looking at this amortization table, the example I just gave you on a $600,000 house at 6%. Not until month 223 does your principal exceed your interest in the monthly payment. So finally at month 223, which is 18 and a half years
Is that 18?
in.
I was going to say 18.
18 and a half years. Now you're paying 1789 in interest and 1807 in principal. So finally, after 18 and a half years, you raised a child from birth to kicking him out the door to college as an adult in the time it took you to tip the scales on the interest versus the principal on your monthly mortgage payment. That's insane, man. So
crazy.
It's very understandable that people want to accelerate that schedule. And you can do that with every extra principal payment you make towards your mortgage. You move farther down that amortization table. So you're cutting some months off and you're moving closer and closer to that, month 223. You'll get there a lot sooner. So that's the positive, right? One thing you said, well, two things that stood out to me. What you said is what are you giving up? One is liquidity. You're not going to have access to that money unless you go to the bank and ask them, with your hand out, if you can access your quote unquote, your equity.
My equity.
Yeah. Your equity.
That I have to ask permission to.
And then
tap.
they'll tell you whether you can take it or not.
Right. And you'll have to go through the entire mortgage process again. Exactly.
And then another thing you said was opportunity. So what opportunities have you given up by tying your money up in your mortgage? You may or may not know. I'll let you take it from here. It looks like I got another visitor coming this way.
Is it like people looking at the house?
Yeah.
Get the model? Yeah. So yeah, opportunity. I think it depends on what opportunities you have coming across your desk. I think it was actually, I was listening to last week's episode. I normally don't, but I just happened to be listening to it on the train on the way home. And, we talked a little bit, anecdotally about some clients of ours who have left their W-2 job and started a business, a very successful business where they're making more money than they did in their W-2 on their own time. And quality of life has gone up, or someone who's been able to detach their escrow account from their mortgage payment because they want to keep that money, liquid inside their policy before doing all, paying the annual taxes or whatever on the property. So any number of things. Mm-hmm. So those are both opportunities that those folks wouldn't have been looking for had they not been more liquid.
Right.
And since they pay high premium relative to their income into several dividend paying whole life insurance contracts. In fact, these two families that I'm thinking off the top of my head each have 5. So there's 10 policies between these two families, both parents, all the children. And it's fantastic. So I think it depends again on what opportunities do they have? If they have none, then of course this makes total sense. And it's what we're bombarded with and taught to do, like get out of debt as fast as possible, save as much interest as you can. But I think taking the opposite look, people should do that once in a while and just say, let me look at this from a different approach. What if someone came to me and said, hey, I've got this opportunity that will afford you X amount of cash flow. Maybe it's a real estate transaction. Maybe it's this, maybe it's that. And it ends up being better than what you're currently doing by paying the extra on the principal of the mortgage. Would you consider that? So those are things I think you're just going to miss out on. And you're not going to be able to participate in. One, because you don't know about them. But 2, you're not looking.
Exactly. And if you're not looking for something, you're not going to see it.
That's right.
If you are looking for it, you are going to see it. Like an example, I decided to get new rims and tires for my truck, right? I've had it for 2 years. I was like, all right, I'm going to do this. I've been wanting to do it for 2 years. I think finally now's the time. What did I start noticing? I started noticing every single truck that had cool looking tires and cool looking rims on it, and taking pictures and all that, until I finally figured out exactly what I wanted. It's no different with anything else. If you're not looking for it, you're not going to see it. But if you are, if it's at the front of your mind, those things are going to be just coming out of the woodwork. So the question, like you said, the one that I always ask is, what else could my dollars be doing? If they weren't doing A, what is B? Right? And then comparing that. If you have nothing better to do with your money, then pay it towards, paying your mortgage off faster. Fine. At least you're doing something with your money, right? Now, make sure you have some emergency savings. You got some liquidity, because things are going to come up and you're not going to be able to access that equity if you need it. Bank only loans to people who don't need the money. So those opportunities, if you got nothing else, but why? My question would be, why don't you have any other opportunities for your capital?
Because you're not looking.
Because you're not looking. Maybe because, for starters, you're not well capitalized. But what have we done?
Yeah.
I mean, so, one deal you and I are both involved in right now, I was able to take a chunk of money that I could have put it towards, paying my house down, knocking off a bunch of the principal on my house.
Yep. We talked about it. Yeah.
Yeah. Instead, I took that chunk and I put it into another opportunity that's actually paying me enough to cover like 2/3 of my mortgage every month.
Yeah. That's
so,
brilliant.
What's better? Only having to come out of pocket for 1/3 of my mortgage every month, or, moving down that the amortization table a little faster.
Yeah, I would say in this case, what you did is the better way. Because one, you don't have to labor. Labor is hard to pay that enormous mortgage that you now have, which I know that hurts Dave every time he pays it.
Every time I pay it. No, what mortgage isn't enormous if you bought a house in the last, 8 months.
Couple of years. It was crazy when we moved to this place, and this is the worst place I've ever. Anyway, I don't like this place, folks.
One more year.
You know me well, know why.
One more year, man. Yeah.
Yeah, but I still have to live here for another like 20 months.
Oh, geez, brutal.
But people love it. Some people love it here. I don't.
Yeah.
I don't like it.
Yeah. Probably people who, I don't know. Kind of depends on what you were used to. What are you comparing it to, right?
Fort Knox area, Kentucky,
yeah,
it's way different.
Yeah.
I went back in time here when we, in 2021. Anyway, don't want to get off track, but so yeah, I think when you look at our sign off on this podcast, control your capital or somebody else will. That is something that Dave and I came up with together because it's literally how we think. And a few years back, I used to read some Kim Butler. I really enjoyed some of her little books. And she had this acronym CLUE: control, liquidity, use, and equity. And I still use that with my clients that I'm talking about. And that's really a filter that I use for financial decisions when I'm making them. Okay, am I going to, I'm going to cede some control probably. Yep. To make money, sometimes you have to do that. Sometimes you don't. Maybe it's a rental property that I already own. I could just pay it off. We were talking about that before we hit record.
Yep.
I could pay off my Kentucky rental home right now with a policy loan if I wanted to. I don't want to though, because I have to build a pool.
I think I like that CLUE acronym. I don't remember that from Kim, but that's a good one. So I was listening to a book recently, and the guy, he used Herb Keller, the CEO, longest serving CEO of Southwest Airlines. And his one focus was, we will be the low fare airline. So when somebody came to him with a new idea, like, hey, a lot of the customers would love to see a chicken salad served on the flight, he asks one question: does this make us the low fare airline? The answer is no. So they said no chicken salad. So if you have a couple questions in mind, one of mine is, it's kind of like a two-part question when I'm presented with an opportunity. One, is this the most productive use of my money right now? If the answer is no, then I don't do it. If the answer is yes, then I want to follow it up with the second question. And I don't have it phrased perfectly, but is this a good decision for me, emotionally and for my family and for my relationships? If the answer is no, then I'm not going to do it. If it's going to cause strain in my marriage, if it's going to cause extra stress in our household because of that, I don't want to do it. Even if it is the most productive use of my dollars, it's not worth the emotional toll that it will take. So I think those are two very important questions. The first one phases it out. You either say, okay, yes, let's move on to the next step, or no, I'm done with that one completely.
Yep.
So
I like that.
Yeah.
I like that. And I think unconsciously that's what I've been doing, especially the last couple of years, becoming a lot more picky. Because my personal situation has changed. I'm trying to do something 20 months from now, trying to move to a new place. I've never lived. I don't know anybody. I'm building a home from the ground up. And yeah, I'm going to borrow money from the bank to do it. No question. Construction loan underwriting's underway. Here we go again.
Yeah.
Super, super fun. The cool thing is, side note, the cool thing is I don't have to bring the 20% until it turns into a 30-year note when construction is complete and we move in. So I get to stay as liquid as possible. So if anyone's building a house out there, construction loan, see if they have, most of them might be like that. I just wasn't aware of that, or you already know that. But if they don't have that option, maybe search for another lender that does have that option. So that allows me to keep myself liquid and in control for longer, which is great.
Yeah. Clue. Control, liquidity, use, and equity.
Mm-hmm.
Yeah.
So obviously, dividend paying whole life insurance, the asset class, right? That product checks all of those blocks for me every time, which is why I'm a buyer of whole life insurance, just like you, Dave, right? And just like a lot of our listeners are. I put my money in whole life insurance. I pay premium, a lot of it, to whole life insurance policies until I need to use that money for major expenses.
Yeah.
Cars, tuition, weddings, houses, pools, boats, investments.
What's the use? But expand on that one. I think control and liquidity is pretty self-explanatory. You either you have it or you don't, or you have some degree of it. But what's the use?
So the use of the money is, I guess, kind of an expansion of maybe the control. So I guess, what am I doing with this chunk of capital? Am I financing a vehicle, in which case I'm going to own the vehicle, have use of the vehicle. Maybe I'm using it for my business because I'm a hotshot trucker and I'm hauling cars all over the country for people at $1,500 a pop, $2,000 a pop. When is the money, the other part of the use, and I think it was multifaceted, I don't remember specifically, but when is the money coming back to me? Is it collateralized? Those types of things. Is it producing a cash flow for me, right? I'm still able to use some of that money. So maybe I want to buy that thing over there, and you have an opportunity for me. I just hit the microphone with my hand. That was great. And I give you that chunk of capital. You provide me monthly cash flow, let's say, and now I still have use, but I'm not having to tap into my W-2 wages to buy this thing or whatever.
Okay.
So I think it's multifaceted. And if anyone wants to expand on that, if anyone listens to that podcast, or I mean, it's been years since I heard that. I've been saying it for years.
She's got a lot of good books out there too. Real easy reads.
Yeah, easy reads. I've got many of them over there. Live Your Life Insurance comes to mind. I thought that was really a good little book for people to read. But I think her, now that I think of it, the acronym is created to kind of nest with dividend paying whole life insurance. Yeah. Because you maintain control, use of the money because it's in there. I think that's what the U is for. Is just you can use the capital that's in your whole life insurance by leveraging it through the policy loan feature, I think is what she was ultimately getting at.
Yeah. Cool. Yep. I like that. There's so many good, there's too many good books to read. So you should start debriefing me more on the books you read, and I'll do the same for you.
Yeah, I'm in the middle of 10x is easier than 2x.
Yep. I just finished that one. That's phenomenal.
Yeah, it's really a good book, folks. That's Dan Sullivan and gosh, I don't have it in front of me. What's the young dude's name there? The doctor.
Brian, somebody maybe. I forget. I'll look it up. But anyway, especially if you're a business owner, yeah, that's a really good one on how to kind of expand. Going 10x, thinking bigger is actually easier than thinking small.
Yeah, and I think you've had some good moments this year, and I like how that book tells us to kind of focus on the 20%. Mm-hmm. which gets us to that next level, and then once you get to that level, your 20% is going to change again, and then it's going to change again as you keep. And it's think big, right? Don't be happy with the status quo.
Yeah, and to grow 10x, you can't get there by just working 10 times harder.
That's right.
You have to work.
I like that even better.
Yeah, you got to work in a completely different way.
Right.
To go 2x, you can get that by just working harder. But you can't go 10x Correct. By just working harder. Yeah, so it's a complete shift in your mindset.
Yes, and that book nests very well. And I don't know what the right order to read. I'm reading 10x is easier than 2x first, and then I'm going to do who, not how, which I think is also a highly recommended book as well.
Which is how you go 10x.
Yeah,
is with people. Using the right people. Yep.
The right people. That's right.
Get the right people on the bus. That's right. Well, all right, man. I think we hit that pretty good. We're about our typical time limit here. So, man, unless you got any parting words, we'll send everybody off with hope you have a great week. Finish up the summer strong. Get those kids back to school. Hallelujah.
Next, I think that's the 24th or something for us.
Yeah. Oh, it's right around the corner.
Right around the corner, man.
Yep. And then it's like, I tell my wife this all the time. I'm like, during the school year, especially now with 7 kids in the same house, I'm like, I feel like Office Space. I'm like, every morning you see me is the worst morning of my life.
That's such a good movie. We quote it all the time.
Classic, man. But that is like, if we can get through the mornings, man, it's all downhill from there in a good way. The rest of the day is a breeze once you get past the morning. So it's nice to have the worst part of the day done right off the bat.
Yeah, you front load the chaos, and then you go into calm waters after that, clean air.
Yeah, you can breathe. So, well, good luck, everybody, getting the kids back to school. And until next week, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.